Okay, so this is problem 6. We're going to look at part 2, which is, scroll down here a little bit. I've put it down at the bottom. Based on the information given and the cash collections you calculated in part 1, would the company need to borrow money in February to meet the cash requirements if the cash balance on January 31st is $15,000? So it means is our beginning balance in February $15,000. Okay, so when I did this work, it concerns me that I came up with a no. No, they would not need to borrow. She then asks, if yes, how much? Show me this calculation. So that worries me a little bit. I've gone through these numbers a couple of times. So if I'm making a mistake, I'm just, continuing to make it over again and not catch it. But I can at least use these numbers, take you through the concept, and, if it's not 100% correct, it's got to be pretty close. So let's scroll down to the cash budget, sometimes called the combined cash budget. And let's just go through. Now again, you're going to be taking this test, so you got to know how to do all of this stuff over here. I'm sure you're going to get blank lines and you got to fill in all the stuff. So we're going to start with beginning cash balance. And this tells us, let's assume at the end of January it was $15,000. That means we start February with $15,000. Then we add cash receipts. So the cash receipts from February is $286,000. That came from the calculation and the video for requirement 1. If you can't remember or don't know where that came from, go watch that other video for problem 6, requirement 1. This gives us total cash available for February of $301,000. Then we need to subtract our cash disbursements, and that's all the information that we have up here. Now, I've done this probably, you probably don't want to do it this way. So notice what I did. I took January wage expense and February wage expense, January raw material purchase, February raw material purchase, and I separated those. You probably don't want to do that, but in my example I wanted to show you how we account for each of those numbers. You may just want to put wage expense, do the math separately, and then add those two numbers together. Okay, so let's start with this working through the cash disbursements. Okay, so they give us some information there. We're going to use that in a second. Accounts payable balance is $40,000. 75% is due in January, 25% in February. So in February, we're going to pay $10,000, the remaining $10,000 of that 40. And you can see accounts payable $10,000. That's what I have there. Rent is $25,000 per month. So rent expense, $25,000. Salaries and wages are paid half in the month incurred and half of the month following. So that means we really have two payments here. We have the second half of January, so that's $30,000. And we have the first half of February. That's $25,000. Right? That's what's paid in February. The second half of January and the first half of February. And so the 30 and the 25, and that's where I've listed those separately to kind of help you understand this. 30 and the 25. Again, you may want to just do that math and then put that together as a combined number. Okay. Administrative costs are paid in the 10th of the following month. So what did we pay in February? Did we pay February's administrative expenses? No. We paid January's administrative expenses. January's administrative expenses would be paid on February 10th. And so for February cash, we'd record the $50,000. Looks like I might have put this in my order being a little bit off right there. Okay, raw materials purchased are paid 25% in the month of purchase and 75% in the following month. So what are our raw materials paid in? Darn it. what are our raw materials paid in February? Well, 75% of January's raw materials and 25% of February's raw materials. And that's where I come up with these numbers. 75% of January is paid in February. 25% of February is paid in February. Okay. The company is required to maintain a $10,000 cash balance at all times. They have an operating line at the bank, so if they go, so it means if their deficit or their excess of cash is less than $10,000, then they can borrow and finance. In this case, I added up all of the disbursements. I get $282. I subtract that from the 301, and I get an excess of cash of $18,500. So that's more than $10,000, so we don't have to do any financing. And the reason, and so that makes the ending balance $18,500, and that's what will become the beginning balance in March. So if I've done that correctly, to answer her question, would the company need to borrow to maintain the $15,000? The answer is no, because they have $18,500. And why am I saying no? Well, because of the cash budget that I just showed below.